Hi guys, caught up with Stephen Roman today, CEO at Global Atomic. What a couple of years they have had, from 25 cents up to $3. Not bad, 12 times return. We talk about a board hire that they've made and also their ability to pick up not only staff from Cominac as it's been wound down, but also potentially some equipment that could meaningfully change their studies and the numbers associated with that. We also look at the market as a whole, the way that they're being valued, and obviously what's going on in Turkey with regards to the contribution from their zinc revenues. And if you want our thoughts and opinions on the conversation, you can find those at cruxinvestor.com/club, where you can also find detailed company reports and analysis. We've got training courses on there. We've got commentaries from experts from around the world on a variety of companies and commodities, including our weekly uranium show, now in its 56th, 57th week. Why don't you go along and join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from all that judgment, trolling and abuse you see elsewhere. And if that sounds nice to you, and I hope it does, go and join them, cruxinvestor.com/club. And we'd like your feedback too. So give us a like, leave your thoughts below. And if you want to see precisely what we talk about today, do take a look in the description below. Stephen, how are we, sir?
Doing well, Matthew, doing well. Summer's finally arriving here in Toronto, and the leaves are coming out of the trees.
I don't think that's the only reason, though. $3 a share. $3 a share. You got to be pleased.
Yeah. No, when we started talking a couple of years ago, I think we were 25 cents, and we've knocked off all of the milestones that we told the market we would do, and made a tremendous progress, both on the zinc side with our new plant up and running, doing great, and now with the uranium with the DASA project. So it's been a very successful last couple of years.
And a very successful last few months. I mean, $3, who could have imagined it 2 years ago? You can't tell me that you knew this was going to be $3 by now, did you? Can you?
Oh, I had a good idea, Matthew. Yeah, because you know what? When we have the largest, highest grade uranium deposit in Africa, we moved it through the permitting process in 3 months. At the end of December, we got our mining permit. In January, we got our environmental permit. I mean, there's just no other uranium project like this on the planet, really, that's moved along that quickly. With such an outstanding project.
Okay, I tell you what, do me a favor, because judging by the questions we've had sent in, some people are coming at this new, I suspect from having not previously been investing in the mining space at all, and they're seeing your story being positioned as a sort of category of one in terms of your ability to get into production. So give me a 1 minute overview for those new people. I'll pick it up from there with some of the points that I want to focus in on, if you don't mind.
Well, first of all, I mean, the big reason I went to Africa, and particularly Niger, as I mentioned previously, they opened up the doors for new foreign investment. They are experts in the uranium field. I mean, they've been producing uranium there for 50 years. The French have been getting 30% of their supply for France from there. And so there's a good in situ knowledge base of uranium. The government knows uranium. It's the big revenue source for the country. And of course, this is a new discovery that's moving along to production. And it will be the preeminent uranium project in the country, because the Orano mines at Cominac shut down at the end of March. And Somaire, of course, we've signed that MOU with Orano to potentially ship them ore from DASA to get things going and also extend the life of their project. But these are projects that have been running for 50 years. Now, where it's benefiting us, of course, the permitting regime there and the knowledge base is that with Cominac shutting down, we've got a complete in situ workforce, right from upper level management right down to the miners, equipment operators, that effectively are now talking to us about moving right to DASA. So as part of our thinking, of course, basically companies look at contractors, they get bids and quotes from contractors to collar the portal, go underground, do the development. Well, in our case, we're doing it all ourselves. So we have the capability in situ with our own management team that have done it before, but also with the Cominac workforce that we are now talking with various individuals to put the core team together to come in and start doing it starting in Q1 of 2022.
Well, that's going to save you time in terms of finding these people, money in terms of hiring costs.
Huge.
They know what they're doing in terms of training. So that's a real bonus.
Well, it's a huge bonus because, we actually have the people right there that are just up the road from us that we can bus into our site. They'll live in their own homes, so we can have a rotation camp at our place so they could come in for 2 weeks, out for 2 weeks. But needless to say, there's no big drama in finding a workforce that's ready to go on the next project. So from a cost point of view, from a timing point of view, and guess what else they've got up there? They've got lots of equipment. So you know what? We don't have to worry about bringing anything in at this point in time. Eventually, we want to have a green mine here, and we're big on the ESG front. We'd like to turn this whole operation into an electric operation, solar, etc. So we'll be talking about that a little bit more as we move along, but that's part of the plan.
So actually, that's really interesting. So in terms of your studies, you have made a set of assumptions about what the cost of equipment's going to be. You've got some equipment up the road which is now looking for a home. Do you think your economics have the possibility of changing?
Most definitely.
Okay.
Yep.
When do we know?
Well, our Q3, end of Q3 this year, that's when our feasibility study comes out. That's our final engineering. And I think you're going to see some improvements both on the CapEx and the OpEx at this operation.
Wow. Okay. So your project just got an accelerant added to it in terms of people and equipment and expertise. That's it. I hadn't really thought about it like that, and certainly not in terms of the timing, but the timing is perfect.
It's perfect. And, our studies are completed end of September, and then we start moving ahead and gearing up. We've now actually doubled the size of our camp there. So we brought in a number of additional containers of basically their CCAN living accommodations. So, we're gearing up for our big program of drilling starting in September. So I think what people need to realize as well, that the numbers that they've seen on this project, $200 million, 26.6% IRR, etc., that's only on the flank zone. So the flank zone is our initial mining area. It comes close to surface. We can ramp right into it, but it's only 18 to 20% of this deposit. So the whole idea with this drilling is to do a little bit more extension around the flank zone. We know it extends on strike and close to surface, so we could extend the life of that area. But more importantly, the rest of the 80% of our 250 million pounds here at this deposit, we'd like to move all the inferred to measured and indicated. We've got a lot of indicated and inferred now. You can see that in our mineral resource estimate. But with some infill holes, I'm talking about moving from 50-meter centers to 25-meter centers. You can move that to M&I, and then you can wrap numbers around that as you move from the flank zone into phase 2 of mining the rest of the deposit. That's going to have a huge impact on our IRRs and NPVs, because then you're incorporating the entire deposit in your economics. This is what people need to understand. These economics that they see now, they're outstanding. Mining at over 0.5% uranium, but as I say, that's only a tiny portion of the deposit. So we need to get the market to understand that we still have a lot behind that.
You do, because I'm looking at some of your Athabasca cousins, for instance. They're saying, they're $1 billion plus.
That's right.
Right? And they are not near production. They're not near cash flows, revenues. And They've got their own permitting, process to go through. So the valuations in North America seem to be, much more excessive compared to some of the African stories. And you're obviously the most advanced African story in terms of getting into cash flow, or at least being in control when you get into cash flow. How do you feel about that?
Well, Athabasca has a certain halo around it because it's in Canada. It's got the big companies Cameco and Orano producing their Denison, and it's a tremendous area with very high grade deposits. There's no knocking that. The problem is it's in Canada. The permitting regime here is awful. It's very, very long. When I was at Denison, we had one project, Midwest, that took us 30 years to permit. I mean, who ever heard of permitting taking that long? I mean, we went through various environmental hearings and then First Nations hearings and more government hearings. It's ridiculous. In Niger, they want to mine uranium. So that's why we're there. And they have elephant deposits. We found a big one. And, it took us from the time we submitted our application for permit, it took us 3 months to get our permit. 3 months. So, that's how committed they are in Africa. Africa is the place to mine uranium, and particularly in the Sahara Desert when there's nobody around. You don't have to move people. All the infrastructure is there because they've been mining there for 50 years. So we have power lines, we have water, we have roads, we have towns. Close enough to us that we can bring the labor force in. So it's just an outstanding set of circumstances that make this an outstanding project.
It's kind of interesting. I think people have been drawing parallels between what's going on in North America, what's going on in Africa. But I think you're saying people just need to understand that, one, you are close to getting into production. I mean, so if everything moves forward as you plan, what are you forecasting in terms of production?
Well, our production, is still staying the same with mining 1,000 tons a day, doing about 4.5 million pounds a year. But people also need to realize this is a completely scalable project. So the reason we picked 1,000 tons a day and doing 4.5 million pounds a year is that we felt as a new entrant in the uranium supply chain that we could actually sell that amount of uranium. Now, if the uranium price moves higher and you have a booming uranium market, obviously we can ramp this up to 1,500, 2,000 tons per day and double our output. So I know that there's been some questions about that. I mean, and people were concerned that we're pre-selling a lot of our uranium. Well, there's no need to worry about that because uranium price now, the forward price by 2025 is in the $40 to $50 range, using all the metrics out there at the moment. So, we've done our numbers at a base case $35. We've run the sensitivities down to $25. With these kind of grades and these kind of low operating costs, like we're at $16 a pound to produce a pound of uranium. So, we have excellent metrics here. And as the price moves up, which I expect it will, because nuclear utilities need to secure supply, and there's more reactors being built. Right now, I heard a stat last week that we're producing about 120 million pounds a year from all the mines. We're currently burning between 180 and 200 million pounds a year. So that huge delta has been, the material that's been sitting on the sidelines is being chewed up. But once that's gone, where are people going to get their fuel from?
Well, I think the big issue this year has been the fact that supply number is definitely nowhere near that, obviously, with the Kazakhs and Cameco coming off, for sure. Okay, so that's good. Uranium, good. There's another aspect to this, zinc. And in fact, if I look at, I think it's, I can't remember which analyst did it, but they're saying the zinc is worth potentially 200 million of the 500 million market cap today. Their analysis, not ours. Would you say that's true?
Yeah, this was coming out of Cormark Securities in Canada. And of course, they've done an analysis at what we have. They say that we're getting valued right now about maybe $1.50 a pound in the ground. When you compare that with Denison at $5 or $6 a pound in the ground, I mean, there's a huge delta here between Global and the rest of the uranium players that we need to fill. But on the zinc side, of course, we built that new plant in 2019. It's running at full capacity at this point in time. And we had an excellent quarter. And so the analyst there is looking at Befesa, our partner, and seeing that they're trading at 13 times EBITDA. And so he said, if you apply the same numbers to Global, our value of our zinc assets, $200 million. So, you know, we definitely know it's in the 150 range, 200, maybe a bit on the high side, but you know, what the heck, zinc price right now has been doing very well, $1.30 plus. We'll have that project paid out this year. And then that cash flow starts coming back to us to employ at the DASA project.
Yeah, I mean, I think the annuity stream of the cash for the next 40, 50 years is people are excited about, you know, and that's great. Well, the reason I asked that question is I was going to work out what you valued the uranium at, or what Cormac were valuing the uranium at, because 300 seems a bit low to me.
Yeah, I would say that take 250 million pounds, at just over $1 a pound in the ground.
Doesn't seem right. Doesn't seem right when you compare it to your peers. I guess that's for you to tell the story of what you think it is worth and start showing them how the next steps. Because I think the other thing you talk about when we started talking, you were 25 cents, right? You've done a succession of things that you said you would do. You've accelerated some of it, and you've kind of moved this thing quickly through the process. What's left to do? But what should we be looking for? Because I mean, first of all, how's cash today? Cash okay?
Well, at the end of the quarter, we were about 14 million cash on the books.
So you're good. You're good for cash for a while.
Oh yeah, we're good for cash. Good for cash. Well, right now, I mean, the big focus is to get the feasibility work done. So we've optimized the process plant now. We're doing our underground mine planning right now. We've designed now the box cut for the portal. So we know what that's going to be dimensionally and where it's going. I mean, all of these fine details are being completed so that we can give that to our local guys and say, listen, start building this project.
Okay. One thing I want to talk about, because we mentioned, the Cominak crew coming through, which is great, but you've also been doing some hirings at board level. Now, this is something that we've talked about in the past, the importance of bringing people on who are able to move the company forward, not just placeholders, but people can actually be useful to the company, right? You guys have...
We don't like placeholders, Matt.
A lot of companies do, though, right? So tell us about this board hiring.
So Dean Chambers came on board. We announced him. Fabulous guy. He's got a lot of experience. He's actually an engineer, but he's been involved as a CFO of a couple of big companies, including Sherritt and I can't recall. There's 2 or 3 others that he was on. And at any rate, he's going to be chair of our audit committee, and he's going to also be involved in our whole project financing initiative. So, of course, at this point in time, we haven't talked too much about project financing. We notice, other junior companies that are far less advanced than us are raising big dollars with equity issues. Depending on how things shake out with Orano and whether they want us to ship them some more, that could be an early cash flow for us, so we could actually start the project with very little money. And with the cash coming from Turkey and with the cash coming from ore sales, that will help us finance the plant. So clearly the end game is to have the plant up and running by 2024. And we are talking to utilities right now about buying uranium starting 2025.
You're already in discussion about that. So that's interesting, because we were always trying to work out are they chasing companies like you, or are you chasing them? How's the dynamic changed?
Well, you know what? I think generally speaking, from all the utilities we've spoken to, they're still sort of sitting on the fence. They haven't made the big decision to start moving into the market. I think that's why you see the uranium price sort of sitting here around $30. But they're definitely interested and they're thinking about it. But you know what? Sometimes it takes a little bit of a bit of pressure to get them to move. I think as we move along here and, the spot dries up, you've got Sprott Securities now starting a uranium fund. They're going to be soaking up spot. There's 2 or 3 others out there doing the same thing. I mean, people know that there's going to be a big move in price. And the other thing I'd like to say today is that in all my years in the uranium business, I've never seen the structure that's starting to happen out there with environmentalists now buying into nuclear and various other people buying into nuclear, of course the net carbon zero and all of these kinds of things. So I think we're into a renaissance of nuclear here that's going to last much longer than previous cycles in uranium. So to have an asset that can run for 50 years, I think we're going to make a lot of money for our shareholders.
That's quite a nice point to end, isn't it?
Thanks, Matt.